Hi, this is Zach Mee with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday the 30th of October, starting off with the FTSE 100, which is basically back at the old support area around 73.70, at least in terms of the peak. I want to see an end of day close back above that to then give it the chance of returning back to the 7,500 area, which is that broken August support line, and also the area of the 50-day moving average. And it has to be said, even though there's every prospect still, while we're below 73.70, of rolling down to the floor of that February trend channel, 71.50, just looks a little bit better now. We've had basically a band of support between 7,200 and 7,300 since March, and it looks as though maybe after Friday's low that we have actually recognized that and are pushing higher, but still market slightly on the edge. Onto the DAX, and here you can see that we have returned to the old May support line there around 14,800. Want to see an end of day close back above that, and preferably back above 15,000 to get this market out of the doghouse, which it has been for at least the second half of October. Still have that threat of a test of that March support around 14,500, but again, like the FTSE, slight hint now that the worst is over, maybe with October nearly being finished. That might be a sign that the threat of a crash has receded, at least for this year. Moving on to the Dow, and here it's been pretty torrid, gone back into that March support zone there again, but the lowest levels there around 31,500 for March, so hoping that we will find support before then. RSI at 28, so now we're oversold, so hopefully a day or two away from the lows if we have not already hit them, because we are now well below that old May support, 32,600. Moving on to Bitcoin, and this has been the star of the show in the recent past, still in that quite tight flag there above 32,100. The tighter the flag, the greater the chance, we hope, that there will be a new move to the upside, and quite a spectacular one it would be if we could then hit 43,000 by the end of next month. The trigger point there around 35,300, which was the October high. And if you look closely, something that probably most people didn't expect to see, or wouldn't have expected to see, we've had a golden cross today with the 50 and 200-day moving averages, which I think is the first time in quite a long time. Just couldn't resist looking at gold today, which apparently, according to reports, is just nudging that 2,000 level. In fact, we've got the 50 and 200-day lines both rising here as well. They're heading into a golden cross, which hopefully will come in the next week or two. Nice flag here as well, which is sort of slightly reminiscent of the one we're seeing at Bitcoin. Minimum target on the upside now expected to be 2050, 2050, while we're above the recent support area. Let's call it 1960 to give it a bit of leeway there. That was also the September resistance zone. Moving on to the stocks, and starting off with Cadence. Here we got a situation where the shares have finally jumped up as they should have jumped up. I've written about the shares over the last week, so it's long overdue. Here, breaking 5 pence on that falling wedge. The minimum target there was up to 7.6 pence at the top of that falling trend channel from May. Above 7.6, looking for up to 12 pence, and that could happen as soon as the end of next month, and that would only take the shares back to where they were in March, so it's not a really ambitious target there, but it would obviously be a good percentage move from where we are now. On to a stock which I interviewed at the end of last week, Empire Metals, and here bear trap gap reversal is working, so we had that bear trap, late October bear trap below the initial support, and then the unfilled gap to the upside. Something for people to learn on a technical basis. Above the neckline there, 4.25 on an end of day close basis. We're looking for as high as 6.5 pence by the end of next month. Obviously, the Pitfield situation going on there. It's been a long, hard road for shareholders of Gildy Sports, but glimmers of hope here around the 0.4 to 0.5 region, and shares, I think, gapping up today as well. Initial target here to retest the 50-day moving average at 0.59, but we could get up to 0.77 as soon as the end of next month if this is the big turning point, and it looks as though it could be, given the decent divergence, bullish divergence that we have there with the lower lows for October and higher RSI trace. On to Hummingbird, which should be feeling the benefit of the rising gold price. And here we're just looking for the shares to break that 10 and 3/4 pence level, the top of that falling trend channel from May. If they can do that, we're looking up for up to 16 pence by the end of next month, which would take the shares back to where they were in July. Moving along to Helium 1, which I think served up a dog ate my homework type of update today, but nevertheless, the initial doubts were dissipated, and the shares hit a low there around 4.3 pence and bounced back very well. So that might be the last time we see a sub 5 pence probe for the shares. In fact, you could say that they actually bounced off that line. The key thing here probably is, though, to break the 50-day moving average and 6 pence, and then that would open up 8 to 8.5 pence, hopefully by the end of next month, barring any further glitches at Helium 1. Beautiful situation here at IMC expiration. It's always good to see shares blow the doors off in terms of the target. The target here was up to 1.15, but we actually managed to exceed that 1.32. Above 1.15 the next time, if we get it, then it would be up to 1.6 pence as a higher target for the shares. Upside value, while we're above the 0.75 area, should probably cover it. On to a stock which doesn't get much coverage, but here it is today. Intuitive Investments. Here we broke neckline resistance on Thursday, 9 3/4 pence, and the initial target here was up to 16 3/4 pence. We can probably upgrade that now with the latest move and head up to as high as 22 pence by the end of next month, if we can clear that 16 to 17 pence area quickly in November. We've got the 50 and 200-day lines both rising as well, so that helps. Hands up, everybody, anyone who understood the RNS from Insig AI today. But here you can see that we've had unfilled gap to the upside after a bear trap below the 200-day moving average. Both the 50 and 200-day lines now rising, so that just gives us the view that above 17 pence on the floor of the channel from this time last year, we should be heading back up to 26 or 27 pence by the end of next month. Can't resist looking at Jersey Oil and Gas again, just in case this rally is the big one. We've had various attempts at breaking the 200-day moving average. That's currently at around 203 pence, but an end-of-day close above that, we could at least be heading up to 240 by the end of next month. And there's always the hope here there'll be a much bigger rally, maybe towards the line I'm just about to draw now, or just drawing at the moment, as high as 280. Maybe as an end-of-year target, but early days yet, and I suppose you don't want to get too excited given how many times the shares have failed to sustain the £2 area. Good to see Phoenix Copper rising at the moment, especially given that it doesn't seem to be dependent on financing news. V-shaped bull flag breaking nicely at 23 pence and above 23 pence, looking for 34 pence by the end of next month. I would even say that shares, you could say that the initial target there is 26, but I think on this occasion, after that bear trap that we had in the bullish divergence, looking for 34 pence by the end of November is not an unrealistic thing to do. Requested stock next, and one of the more difficult situations around. I said last week that we're looking for Regtech to break 15 pence. Obviously, this is not a widows and orphans play, but an end-of-day close above 15, and we could be heading back towards 35, 40 pence, which was resistance on the way down. But as I said, that is a very difficult-looking situation. The gold price also helping the following stock. Here we've got Shanta Gold breaking through the 200-day moving average with an unfilled gap to the upside, which is actually quite a flourish, quite a strong thing to do. Initial target here, 12.2 pence by the end of next month, and we could see much more. Again, the upper parallel of that trend channel heading up towards the old April resistance, 13.5, 14 pence. Also happy with the rise in Tirupati, helped by the Chinese export issues. And here we've got a situation where we've seen the shares recover the 50-day moving average at 18 pence, unfilled gap to the upside today, V-shaped bull flag, so it's a bit like Phoenix Copper. And we're looking for the flag to break at 22.5 pence to take us up to 30 pence by the end of next month. That's the second unfilled gap to the upside. The first one was the hammer candle and a bear trap gap reversal. So Tirupati really behaving well with the technicals at the moment and backed by bullish divergence in the RSI window. Finishing off with Upland, where despite the doom and gloom merchants, it hasn't been quite as bad as one would have expected. In fact, the shares almost exactly hit the 50-day moving average and the that uptrend line from July, around 2.5 pence. I did see on IG that the low was 1.99 pence, but that's maybe a different thing in terms of the spot price. The view now is that above the 2.5 pence area, probably looking for at least a rebound back to the 3.25, 3.5 area, the top of the gap there, 3 3/4. So that makes for a decent target while we are above 2.5. Below 2.5, we've got support there at 1 3/4, but not as bad, I think, as maybe some were expecting or in some cases hoping for. That's it for me today. More updates tomorrow.